And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style. And markets, we got a lot to go through and unpack here today. Welcome out to our last show this week, Friday Fun Day, I should say. I've got Coach Frank and Coach Matt here joining me. Let's bring the coaches in one at a time. Frank, how you doing today, sir?
Doing well. Excited to be here. Happy Quadruple Witching Hour to everybody. For whatever that's
worth. Is it
worth.
happy for anybody though?
Well, it depends on what you have.
Depends what you're looking at. That's
exactly.
True.
Yeah,
that's true.
It's definitely going to be something you hear about today. How much it played a role, who knows, right? But definitely a story you'll be hearing.
I've read the Quadruple Witching headline about 5 or 6 different locations, Maddie. So it's definitely out there right now, and increased volatility can happen. Maddie, what are your thoughts on it?
On Quadruple Witching?
Yeah.
I think it's an event that certainly can show increased volatility, but in my experience, that is a 50-50 crapshoot and pretty random when that increasing volatility happens on the upside or the downside, and it kind of fits with the market mentality a lot of times. And right now, I think you're seeing a little bit of that market mentality play out with this day. I don't like you're seeing a very similar technical situation here today that you've really kind of been seeing all week long. This is not the first time we've played this game here today, this week. When you drop this down into the 30-minute chart, you're going to see that same type of support support zone bounce here that you saw over here on Tuesday, that we saw on Wednesday as well. Didn't get down into the bottom end of the ranges here on Thursday, but again, that's what this week has certainly been. It's been a choppy, nasty swing traders week. Swing traders have not loved this week outside of some of those pop and runs out there. But outside of that, it's been a pretty nasty swing traders week. A little up and down, up and down, up and down. Market doesn't seem to really kind of find a clear direction on where it really kind of wants to drive here. What's going to be fascinating today, though, because today does feel a little bit differently. Would you guys agree with that, by the way?
I do.
Yeah, I would feel,
specifically does. And you're seeing a little bit of that because we violated the low of yesterday, the wickety wick nonsense that none of us love to see. We see a little bit of wicks testing underneath that zone of support that's been driving the market back up a little bit. And when you're looking at it from where this run began, where this run to the downside began, you see this downward moving wedge over here over the course of the last 48 hours. You start your run from there. Gives a little bit more, a little bit less distance to finally break that support level. So you do see a little bit of differences from a technical perspective. But honestly, if it wasn't Quadruple Witching Day, I wouldn't say it's any vastly that much different than what we've seen over the entire week. We've seen some nasty cash opens. We saw a nasty cash open. We saw a nasty cash open over here. We saw a nasty cash open on Monday as well. And so we've seen this song and dance this week. It's once again, is support going to hold? And that's an open question at this point because support's in the zone of testing that right now. We're going to have an important close here, guys.
Yeah, today is going to be. The close always matters, but sometimes it matters more, right? And for me, at least, this is going to be the close really matters day. I just am wondering if it's a coincidence that Quadruple Witching Hour happens the day after Tim's birthday or not. Now I'm sitting here pondering that as you're detailing analysis.
That's some Illuminati type stuff right there.
Yeah, I'll blame Tim for that.
I don't think the market's designed it for me. By the way, what Quadruple Witching is, I just dropped a blog from Tackle Trading in the chat out there, Team Tackle. If you're curious what we're talking about, it's the simultaneous expiration, I think, of stock options, index options, futures options. Yeah, you bet. And I dropped that blog in there if you want to learn a little bit more about that.
A lot of cash flow traders, we call it payday.
Payday is not a bad day as well. And I think you're right, though, Matt. I mean, the volatility here has been pretty consistent throughout the week. We've been pushing towards resistance, 44.80. Then we get slapped down. We're now down here on a support test. We'll talk a little bit about what's in the news.
And again, I know it's Quadruple Witching Day, but when you just look at this volatility you saw with the downward movement in price right there, is that vastly different than that volatility you saw yesterday?
No, but it will make for more interesting headlines this afternoon.
That is true. That is true. But what's really different, though? The only difference is the sell-off started from 44.75, whereas the sell-off started from 44.64. The bottoms came into 44.33 versus 44.22. You have the exact same movement there. Literally the exact same. Is it really any different than that sell-off there? Is it any different than
Nope.
that sell-off there?
Not to my eyes.
That's what we've been seeing all week long. All week long. In the market, it will find a direction. There's no doubt about that.
Mhm.
But this is an important test for the market, and it might fail.
It might
No
fail.
doubt. It
And
might
let's
fail.
be honest,
But it's an important test.
from a bullish point of view, I don't know about you, Matt and Tim, but I mean, I didn't really want it to break that top end of the range, right? That 44.80 resistance level, or at least resistance zone. That would have been, the first, real bullish signal, in my opinion.
Mhm.
I don't really want it to happen today. I'd much rather it, I'd like it just to stay here, right? If I could have it do what I want it to do, but I didn't really want to have the trigger on a Friday morning, Friday early afternoon. You know me, I'd rather it just wait till Monday and decide.
Well, I agree with that, and I don't see the market breaking out here today. I certainly see it could break down. But if you're looking for, if you're asking the market for something as a bull coming into the weekend, right? And you're saying, okay, give me something. What you want to see is you want to see a recovery. That's
Yep.
it. If you see a recovery here today from a market, and you're starting to build into that a little bit. This market got real hairy here in about
an
2
hour
hours ago,
Yeah.
right? Because I'm Tim, myself, Emily, Christian, Mark. We have this little power hour in the morning. We all hang out kind of right about an hour after the cash open. We all kind of hang out there talking shop, talking trades. What are you looking at? What are you looking at? That type of stuff. And man, there about 2 hours ago, there was like, is this going to break? Is this dam going to break? Is this dam going to break? And quite frankly, a lot of that conversation was, if the dam does break, what is that next action? Where can it go? And we were just, talking hypothetically about certain things. But again, every one of us were looking at saying, it's got to break first though, right? We've seen these tests. And you are seeing a test underneath support. You're seeing it get underneath that support level with those wicks. Can it recover? That's the question I have coming into the close, because if it does recover, and again, that's an if, not a when. If it does recover, I do think you line up that breakout coming into next week really, really, really nicely. If it doesn't, there's a lot of garbage underneath this market right now.
Yeah, there is, and there's another story happening in the market and in the sectors as well. And we're going to look at all those today. Kind of break them down, kind of get ready for the weekend. Pretty key levels on the S&P. Why don't we just break these things down
very quickly down?
Yeah.
Yeah, very quickly on the other indexes. You got different patterns, well, let me put it like this: you have different trends coming into all of the different indexes right now. Nice little bullish trend where you're testing the 50 and the S&P. Nice little bullish trend where you're testing kind of the bullish zone between the rising 20 and the rising 50 and the NASDAQ. In the Russell 2000, you're looking at a test of the cluster of every single moving average right now, but really kind of that 2200 zone plus the combination of the 200-day moving average right there. And obviously, we already took a look at the S&P, but when you're looking at the Dow, you're looking at a little bit of a violation of that 50-day moving average, and you're kissing towards the lower end of that of the overall range between 35,500 and really that 34,400 level, and you're clinging towards the bottom. Those are different trends. They have different momentum. They have different patterns. But what is consistent is the price action this week. This market this week, and it's a little different than previous weeks, but this market this week has been trading very, very similar with one another. You're look at just this 5 days, up, down, up, down, up, down, up, down, up, down, up, down, testing major support. When you're looking at the Russell 2000, little up, down, up, down, up, down, up, down, testing that 2200. I would call that major support in the short term for the Russell 2000. When you're looking at the NASDAQ, the best of the bunch, no doubt, right? The best of the bunch. But when you even look at the best of the bunch, up, down, up, down, up, down, testing not a major support level, but still testing that exact same type of support level that the entire market is going through right now. And then obviously when you look at the S&P 500, which is the barometer of the entire market, up, down, up, down, up, down, up, down. So from an index perspective, I'm not seeing a lot of differences with the price action just from an index perspective this week. I got this entire market all teetering on the same stuff. Are we going to break? And I think there is some hesitation right now in the entire market. Are we going to break? And if not, what's that next catalyst to propel us to go into that next leg up? I think that is an open question that the entire marketplace is looking at right now.
Yeah, and the market's going to have to digest whatever the Fed is going to be
And let's
saying
just
next
face
week
it,
as well.
in September, again, there is some seasonality there in September. I do think that's a little overblown, quite frankly, but there is some seasonality. And when a market can't catch a wave and it can't catch and it can't gravitate towards some type of theme, and there's nothing to really kind of push it there, that seasonality concern in the back of your mind is just like, okay, let me just go take a vacation then.
Yeah, take a week off a little bit. At least you're going to wait for clarity. There's no question about that. Frank, anything else you want to highlight on the index?
No, I think Matt really did a nice job in that. I think he's absolutely right there. With this week's of price action, it's different places, but the same price action, right? And I think that's fairly telling. Nobody wants to blink first here, right? We just don't know what to do, and it's okay to say that, right? Because we haven't broke support or resistance, and we're just all kind of waiting for that.
Is this kind of a fair analogy where the Bulls and the Bears are just playing a big game of chicken right now?
They are. Yep.
Who's going to blink first?
Yep.
Yeah, to a certain extent, yeah. I would say so. I'd be leery of the thing for me is if the support does give out, what exactly does that mean? We've seen that 50s, zone give out, and it's been more of a zone than an actual number, right?
Yeah.
And so, if we do break to the downside, I would expect a pop of selling, because that's a sensible place to get in bearish, to hit stop loss, etc. But what does the candle the day after look like? That's what I think is going to be interesting.
Okay, I love that question, because that's if A then B type stuff, right?
Yep.
If the market does violate support, and we're talking the daily support level, right?
Correct.
We're talking the 50-day moving average, the daily support. We're not talking major market reversals here.
No.
Right? We're just talking short-term analysis here. Now, if a market breaks support, where is that level of support? Let's really kind of identify it now. You got some wickety wick type stuff there. I'm gonna give it, let's go 44.25.
Okay.
If 44.25 closed under 44.25, if we violate support, then what happens? There's a chart I can't stop looking at. Whenever I get concerned about the overall health of the short-term marketplace, or the marketplace that has a lack of theme, or a marketplace that's volatile, or a marketplace that either myself or you or anybody in the market is showing a little bit more concern than typical, or when I see a sector get absolutely blasted like materials got with the specialty chemicals and anything with specialty in the name today.
Yeah.
Anytime I get a little concerned about one specific area of the market, I just got to come look at this weekly chart, because there's a specific zone on this weekly chart that has just been so consistent. And when you look at the last year, anytime, because today's not the first time we've had concern from a market participant perspective. Anybody that has been trading post-pandemic, they know the random acts of, price movement that can happen in the market, and how the wind shifts, like we're hanging out back in Emery County, Utah, back when we were 17 and 15 years old, Tim. We understand that, right? But when you look at this, anytime we get into the zone here, anytime we get into the zone, and so until I see the weekly long-term charts really show some weakness, because dips aren't weakness, they're profit-taking sessions. And so when we see some weakness, a double top, a double bottom, a violation of trend, a violation of pattern, I think at that point we can get a little bit more concerned with the overall health of the marketplace. But if that short term does violate, you are looking at 4,400, which is a pretty tight backstop against the market right now, right? A pretty tight backstop. And I'm going to absolutely say 4,400 can play a role in the market. If it violates that, you're most likely looking at the worst case scenario at this point, with the market going down another 3, maybe 3.5% coming into the 20-day moving average on the weekly chart, which has not even been touched since, guess when?
October last year.
Last September and October of last year.
Yeah.
And so I don't think we should overreact on the long-term perspective. Those cash flow systems doing fantastic. I mean, retirement accounts, who's really complaining about the retirement account after
doing
this
well.
type of price movement if you're just in the S&P? But the concern to me is not the long term. The concern to me for right now, quite frankly, is this week has not been a fun week in swing trading, and I like swing trading. If this violates, it's going to take a little bit of time for those swing trades to set up. That's the concern I have, quite frankly. It's not to the long term. It's just those good swing trades that could really solidify themselves. And so it's more about just, okay, we just won't have the opportunity if it violates. And you know what else is starting to pick up out there? Shorts, guys. You have some really good shorting patterns going on right now that look really saucy. And so when you're looking at the market, it's always a tale of two sides of the coin there. Right now, I do think it's a little bit of net neutrality. But again, you look at the tackle rankings from last week. Many of those sectors were already in a certain degree of neutrality. It really is about this market holding support, forming up, and getting ready for next week's trading.
You know, and I know that both of you guys have done your scanning, and Frankie, we're going to go through some of your charts a little bit later in the show. Simple question, Matt, are you finding as many good bear opportunities as bull, or are you seeing it one way or the other, a little balance?
There's a lot. Well, there's some sectors that are just garbage right now. Like just, and when I mean garbage, like there's not great trades there. There's a lot of chop, recent violations of patterns and whatnot. And this is just for me, Frankie, but when you are looking at some of those sectors out there, I found a lot of trades in tech. I found a lot of potential trades to talk about in the technology sector. Tech has been one of the better performing sectors over the course of the last forever. But even in recent history, you have a higher pivot high. You're trying to fight for support here between the rising 50 and the rising the 20. Obviously, you're looking for confirmation here above the 20-day moving average. But I did find quite a bit of stocks from, a stock we had on the radar last week, Unity Software here, Frankie. Unity Software came off a nice little bounce up 130 last week. Now it's looking for a potential breakout. That was something that I found interesting in the tech space. Snow has an interesting pattern above a high base ascending triangle pattern that kisses up against old resistance here at 325. And so those are just two examples of potential trades. But for every potential, and this is fascinating, but again, not surprising given the market price action this week, but for every potential really, really good trade I found to come into next week to discuss, you got your DocuSigns of the world, showing nice little M patterns, violation previous week of support at 280. Look at this little bear flag coming back in down to the downward 9, slowing momentum. That's a nice little bear retracement coming into old resistance. And so for every good tech play that I personally found in scanning, I found an equal and perhaps even better bearish trade in the tech space. What did you find, Frank?
I wouldn't go that far. I did find a lot more bear trades really this last couple of weeks, but today in particular, than we have been used to technically. So I'm definitely on board with you on that side of things. I still found more things I'd be interested in buying than going short on though.
No, I did too. Just to clarify, I'm just talking tech.
Oh, just in tech.
Yeah.
Okay.
Just in tech.
Yeah, I would maintain that stance still just in tech. There are a couple bearish looking things in the tech or the communications, but and there's some things that are pretty ugly. And I definitely wouldn't want to be a bull, but I guess I'm kind of thinking about a new trade like that you could build a trade on that, right?
Yeah.
But some of the things that have just, had that increased volatility, it's really tough to do so. So I would still say I found more things I was interested in buying in specifically tech than selling. But I would also say that you are right. There are more technical, bearish tradable patterns in tech than we've been seeing as of late.
Well, I mean, you take, like, for example, to go on that, a month ago, I think the ratio on my scanning was probably, honestly, like 8 to 1. Like 8 bulls for 1 bear for every 8 potential bull trades.
Yeah.
2 weeks ago, it was like 5 to 1. Last week, it was like 3 to 1. This week, I found like 24 potential bull trades and about 17 potential bear trades is what I personally found. Now that's just low in general for what Frank and I typically scan, right? I mean, typically, Frank, when we come into that scanner report meeting on Friday, we got a couple hundred picks
We're usually going through a couple
in a
hundred.
good trending market, right? In a good trending market. I think the potential trades for next week is just down across the board because of the volatility right now.
I think so too. I think we need that movement one way or the other, right? Support or resistance
Agreed.
to give out to look for those opportunities. So it makes sense, right? If we're kind of stuck in the mud for a week, these things they're at resistance, but they can't break through, or they're at support, but can't break through. So it makes sense. The stocks are doing that as well.
Well, and when you take a look at the sectors, when you're looking like the cyclical areas of the market very quickly, frankly, let's just take a look at finance here. We're talking about a little bit of lack of, quality technical setups out there in the broad market. Well, a lot of it's due to what we're seeing in the sectors themselves. A lot of neutrality here in the financial sector. And when you're looking at not even the last week of data, really kind of the last now 2 weeks of data, just really stuck in mud here, and not a lot of great movement. What's your reading finance here?
Yeah, I mean, you spot on. I don't even know if I think I have one thing off the top of my head in finance that I thought was, oh, that's interesting. I think that was Key Bank at a breakout on a W pattern.
You got Key Bank. I thought about Key. Key looked good. I did like Key. I about wrote Key down. I did. And you know what I said to myself, Frank? I was like, maybe 2 more days.
Yeah.
Right?
I would.
That's all I said. So I got close to writing that one down too. The one I found there that I just to kind of go on was ING. Little weekly type breakout, but you're a distance now with the price movement today. So not a lot of great setups there. Last week, Frankie, we had a nice little ranking on the financial sector, I believe at 35, which is if you look at the Tackle Gridiron over there at the Tackle newsletter, 35 represents a slightly bullish ranking for us. It would be a +1 ranking for us at Tackle Trading. Have you seen anything this week in the financial sector as you're going through your scans today that would change that ranking for you?
I don't think so, unless you want to knock it. I think the debate that we'll have internally, and I think it's always a fun one to have, is do you knock it for doing nothing? It didn't do anything right? I think, as a whole, that would be my argument. Finance didn't do anything to get you excited, but at the same time, did it do anything wrong? No, much like the broad market, it held support. It's, held even intraday support. So if anything, I think that's do you knock it because of that reason, right? And who knows where, we'll land on that. But I think that's really the only discussion that you're having. I don't think it deserves it on the face of the weekly performance.
I think that's a great question, and I do love that debate. I don't think you downgrade at support when it's doing this.
Well, I think I know where you and I will land.
Right.
We usually land on the same
I think you do it at resistance, right? You do it at if it's sitting at resistance like it was up here, and it consolidates this exact same thing. Take this last 2 weeks here, you just smack it up here at resistance. I'm going to downgrade. Because the amount of time strengthens that resistance. Don't get me wrong, I'll love the resistance breakout when it occurs.
Sure.
But I would fight for a downgrade here. And maybe it's just my own personal psychology, but to me, I see this as the market playing defense.
Yeah.
I don't think you downgrade when the market's playing defense.
No, I agree. I think the downgrade comes if that floor gives out, it's an easy downgrade, right? But that's an if, right? I mean, support's been holding for over a week now, for 2 weeks almost. So you got to like the defense that it's playing.
Well, and when you are looking at the financial sector as a collective right now, I think it's a pretty easy technical read here. I mean, you're just seeing this kiss up against the 20, kiss up against the 50 here. You got to see it close one way or the other. If you're looking at the bull, I do think you got to close above the 20-day moving average here. So just keep an eye on that. Let's take a look at the next sector in the what we define as the cyclical areas of the market. Industrial here last week ranked at a 45 ranking, which represents it's left of the 50 mark. It's a bare lean, but it is a neutral ranking here. Frankie, has anything happened in the industrial sector for you to adjust that ranking?
No, it's ugly. Technically out there, especially in the big names. But I mean, it really is pretty broad within the space. I mean, you look at things like, Caterpillar just knocking on the door of breaking a pretty significant support zone. Been knocking all week long.
You and me both right there. I have that one
real
written down
ugly.
too.
I was looking at CSX, that breaking down even further here today. And a lot of times the way when I'm thinking about the markets, just because I wouldn't trade it doesn't mean I don't like it. Just means there's not a good trade that fits my rules and whatnot, right? Yeah. But I mean, everything in industrial is like, oh, that's gross. I wouldn't, it's maybe too extended to want to go bearish, but I, for one, wouldn't want to be buying into it. I think that's, for me, based off of what I've seen on the stocks, I'll probably be, looking at a downgrade myself within the industrial sector as a whole, because there's just really not a lot that I like. The one thing that we do have going for us that I do think, always, and you brought it up on finance, if we're going to bring it up on finance, we definitely got to bring it up on XLI, because we're sitting at that $100 support zone. I mean, that's been a big support, no matter how ugly it's been, right? Rewind back till May, it was looking nasty back then too. Yeah. That was a nice little bounce. And so this support zone might keep me from downgrading, but I would be pretty quick to downgrade if that support zone does get violated.
I see the support zone right there, and you started seeing buying behavior come in at those levels, but that was that to me was more market related. You saw the market stabilize there as well. You're right there north of that $100 mark, but you are definitely in the zone. When I look at it, I do think you got to respect the current weakness in the industrial sector.
For sure.
With a ranking of 45. You violated some support levels this week from a daily perspective. 102, you see the 102 handle right here. Nice support. Try to fight for that support right here as well. That got violated this week. And so I do think you're looking at that $100 mark, and I do think you're in the box a little bit with the industrial sector right now, in the box between 106 and 100. And so it's a weird scenario, Frankie, because you like the support zone, right? You like the support zone. You could definitely see buyers come back in at that support zone, but the current weakness. And so I do think you got to respect the current weakness over the hypothetical support bounce a little bit more. That's a downgrade for me. And then when you're ever in the box for me and you're kissing at the bottom level of support, that's a -40 for me typically. I think you got to respect the ability for the market to break down the same way you respect the ability for the market to bounce.
Sure,
so
absolutely.
I think you got to respect the current price action more than the hypothetical one.
And
so I'm a downgrade there.
Yeah, I'm going to be probably too, because one thing that I usually do when the XLs are at support levels that I'm not much of a pure support bounce trader, right? I'm much more of a, you got to break something. All of my trading rules are you have to break some level of resistance before I can take action. But when I see something like XLI at what I think is an important support zone, I immediately start thinking, okay, well, who would I want to buy in the event that the support does bounce? Because I'm not going to be surprised if support holds. That's the support for a reason, right? And I just look at this stuff and I'm like, not you. Well, and it's just, and so that is what kind of concerns me. And again, maybe that's just my personal, trading taste, but that seems like almost universally everything I was looking at in there's like, you just got a lot of work to do before I'm interested, even assuming support holds. Obviously if support breaks, it's even worse, right?
When you're looking at this sector, and let's just go spotlight this sector. So let's go down to the industrial sector. We're just looking at S&P 500 components in the top. Anybody buying UPS?
Not a buy.
Honeywell?
Nope.
UNP?
Nope.
Raytheon?
No.
Boeing?
No.
GE?
No.
Caterpillar?
Nope.
All of these are in short scenarios, guys.
Yeah.
And so you look at the top of this area of the market, there is just nothing to hang your hat on. There just isn't. I didn't write down one bullish swing trade.
I don't
in the industrial sector.
I don't think I did either.
And so I look at that support bounce here and I'm saying, yeah, I like it.
We still got a lot of work to do.
You better hold. You better hold. Because if you don't hold, you look at, again, the Boeings of the world. Under the 200-day moving average, cup and handle, descending triangle coming into a 210 support level. You look at Caterpillar here. Underneath the 200-day moving average, $200 support level, got some fire going into it. Just a couple examples, but there aren't a lot of bullish trades out there in the industrial sector. It's a sector that's a stay away from me. But again, you come back to the sector, and you just can never get away from this, Frankie, because we're so prone to look at the past.
Yep.
The last time we were overanalyzing the depth of this sector, $100 got gobbled up. So it's one of those, let's see it first.
Yeah, let's see how that goes. While you were going on and on, because I was seeing the same thing, especially at the top end. I was like, okay, well, who's looking good, from the S&P within this area. I did find PWR. I thought they were an interesting one, so maybe they'll go to the watch list if we hold that support level.
Little 119.70 little break.
Little break. I see a reversal characteristics in TDG, so I guess there's a little bit more, but the point does stand. I mean, the big names. And even not just the big names. I mean, as I'm going through everything, is like, there's okay. I don't mind that one. I don't mind that one. But, oh, gross. I see a lot more gross. So, but maybe at least found a couple.
You haven't seen gross yet. We haven't looked at materials.
Yeah, this is the gross.
Let's take a look at materials here now. Unlike the first two, a little slight downgrade I think is expected out of the industrial sector. When you're looking at the basic material sector here, you're absolutely in front of a downgrade. It's just a matter of how far.
Yeah.
Right. How far are you going? Well, you start at a 40. I'll start at the 50 handle, given the fact that you're coming into some decent support level at 81. You got the backstop of the $80 price level, which is the rising 200-day moving average. We have not tested that rising 200-day moving average in the material space for quite a day here. Looking at on the weekly chart, you got some garbage here, guys. That is a lower pivot high on the weekly chart. That is never a good sign. Shouldn't be too surprising. That's why we wanted that right shoulder break. Let's get back up there. Now we didn't. Now we're looking at that fight at that $80 mark. I do believe it's a major fight here, right where the 200-day moving average is. Once again, is right there in that 80 zone. Come back out to the weekly chart. You see that 80 zone come into play here. You see the 80 zone come into play there. Backstop is the 78 price threshold where the rising 50 on the weekly chart is. But you can't mince words here. This is gross, guys, in the material sector. And it is across the board. It's gold. It's specialty chemicals. It is a sector violation here. Momentum tried to break yesterday. Continue the follow through. I think it's one of those moments from a short-term trader's perspective. You got to have time here for everything to do a little bit more solidifying. I didn't have one trade here. Not one trade to discuss on the bull side.
It's really, and it's come full circle, because for a while you really did have some of the chemicals and specialty chemicals in particular holding it up, but that ship has sailed.
Take Lynn Holdings, right? Lynn was one of those stocks. We were looking at that 316 breakout for a few weeks here. Doesn't do it. That's now garbage here. You're not looking at buying the dip there. When you look at Sherwin-Williams here. Same thing. You're looking at a couple weeks ago, you're looking at a great, nice consolidation pattern coming into perhaps a 310 breakout. Never occurred. Now you're looking at a lower pivot high right there. You already saw the kissing of the 20-day moving average right there. Now you're looking at a violation. And so that's before we get into the discussion on, the volatility we're seeing in the metal mining community. GDX. Fighting for a support bounce. And I maintain what I said yesterday. I love the zone in materials, but it is right now locking those risk graphs down and selling those covered calls.
That's right. Yeah. You have to adjust for the risk because it's definitely under pressure. And on that XLB itself, Matt, I mean, you still got the 200 rising. So I don't know if you go all the way into a bear call in terms of negative like 35 or something, but probably more pushing towards that, right? I mean, we're looking at a downgrade.
We don't radically act on anything. We're very consistent with our price, and quite frankly, we downgrade over time, so we don't ever have to go from, oh my goodness, we were bullish, now we're bearish. No, materials was ranked 45 last week. I think you're looking at a 40 last week. I think you're looking at a 10 to 15 point downgrade here.
Yeah, probably back in close to neutrality.
I think you got to call a spade. You got a long-term chart that's still fine, and you got a short-term garbage. I think you got to respect that, and I think it's 50-50. So I'll put it at the 50 for me, but
Mhm.
Yeah.
We'll see where everybody else lands.
While we're in this space, though, what about energy? Energy's had an interesting week.
Energy has had a
It has
fascinating
had an
week.
interesting week.
It is. We're looking at energy last week. We had the 45 handle on it. And you are looking at some, resistance levels right above 50 that did hold. We look at the wick over there. That coincides very nicely with the high of 3 days ago. You drop this down on an intraday level. You see that kind of resistance level come through. But energy, where the market's taken a little bit of a punch over the last couple days after the big bounce we had on Wednesday, energy here, yeah, it's taken a punch too, but I kind of feel it's taken that punch fairly well. Tried to test up higher on the overnight action in the energy space. You're above the 50-day moving average. You'll see all the moving averages now smiling at you, Frankie. Even that 50 days trying to turn that frown upside down, bro. And so you see all those moving averages turn around there. You come back out, see a little bit more. You see a little bit of an increasing support level here against that one. Coming into resistance, I like energy's chance, I do think you got to respect over this week it getting back above the 50-day moving average. That's the first time energy has been above its 50-day moving average since back in June. I think you got to respect that. This is a positive 40 preparatory breakout for me.
Absolutely, and it makes perfect sense, right? If we go back in time about a month when we were looking at that, breakout of 50, and then obviously we gave up pretty quickly there. That resistance still is important, right? And the fact that we had that 50 moving average fall below us, I mean, that was the nature of the beast, right?
Yeah.
The price kept dropping. So breaking through that 50, I said that's a bullish signal, but not a bullish entry point,
Yeah.
right? And so I maintain that. Absolutely, though, a break out above that resistance level, 50-50 approximately, is a pretty good signal, in my opinion. I would
Let's
definitely
get a
want
number.
some things.
Let's
get the
a
actual number. I think
50-35.
I got 50-57, I believe, was the highest point, like at the end of July, if I'm not mistaken.
Today, 50-22, 50-35. Let's go back out in time and see what it was, Frankie. Yeah, you got about 50-60 top wick, 50-62.
I think you want to take that. I think it's so little.
50-62 top wick.
Yeah, I mean, it's such a small amount, right? That why not pay for it would be my argument, right?
Well, I think if it works, it's going above there Monday anyways.
Yeah, I think so as well. And there's already some things that have broken out, right? Front ran a little bit, like Williams, WMB. They had a really nice little break the other day, and sold off with the whole sector yesterday. And so they're all, all is maybe a stretch, but the vast majority are looking the same. I think the thing that's going to be interesting in finding trades in this area isn't going to be the entries. It's going to be the risk reward, because we do have a lot of overhead resistance on these things to navigate, right? And depending on how you target and all of that will probably change who you like as your favorite candidates going forward. But yeah, I think at this point in time, the play is to have some things in your watch list prepped up for that potential breakout in energy. I know that's what my plan is.
Yep. And we will definitely go through some energy stocks in that scatter report meeting later for those scatter reports as well, Team Tackle.
Go
ahead, T.
No, I was just wondering, what about the growth areas of the sectors?
Well, let's take a look at the growth sectors very quickly. And the growth sectors would be technology, discretionary, and communications. Technology last week was right there, I believe. Let me get my notes correct. Right there at the 15 handle. Just wanted to verify that. I definitely think you're looking at a downgrade both for slowing momentum and increasing volatility. I don't think we're looking at anything aggressive here, Frankie. I'm looking at a downgrade, 5-point downgrade to respect this shifting momentum.
Yep, I would agree, but still really interesting things there.
Absolutely.
You can't tell me you're not interested in that Microsoft breakout, right?
100%.
That's still on the, Apple.
Still on the radar.
I don't know. I don't really like them failing at that resistance level
today.
Or breakout point. Today, definitely.
It's today.
Today, if it wasn't already, today definitely changed that. Semis have pulled
Frankie,
back a bit, right?
I was looking here, liked it there. This whole thing, I'm like, I like it. Nope, don't like it anymore. Never confirmed. It just never once gave confirmation. So, it's just kind of one of those stayaways until it does. And it has the chance. like, stabilize early next week.
For sure.
Stabilize.
Yeah. I
right?
mean, yeah, that can
That's it.
absolutely change
But
within there. So
but
I mean, there's
Microsoft, Frankie,
oh yeah,
absolutely still looking at that.
still looking really, really nice. We've seen selling in semiconductors today, but I mean, it's been a good place to be for quite some time, right? And so still think there will be good opportunities in there. I would agree that with the slowing of the momentum and the increased volatility, for you and I both, that usually is, our automatic default is we want to downgrade when we see that, right? We don't always necessarily do it, but I think I know it's my default mode. But more
100%.
volatility, I want to downgrade, especially if we're, rated pretty highly. But I still think this is an area that's very intriguing.
Tim and I were talking about this earlier. You'll see financial companies start downgrading things after a week like this. We've been downgrading a lot of sectors for 4 weeks now, 5 weeks now, 6 weeks now. Those two things you just said, Frankie, the shifting volatility, that is always a telltale sign. That is always a telltale sign that something is happening, right?
Yeah.
Something is happening. And then you start to see intraday support levels fell, and you start looking at it on the defensive perspective. That's what I think you're looking at tech right now, is saying hold, right? Hold. Yeah, we're looking at the Microsoft breakout. Yeah, there's some in the semiconductors, and there's some good trades in tech in general. Absolutely. But it starts with holding, right?
Yeah, hold that
We're
support.
not talking about breaking resistance and let's all go out there and let's party like it's 1999. We got to hold this support level for those bullish trades to really solidify themselves. So I think we're looking at tech a little bit differently this week than we have in recent weeks, because we are all talking about, snapback retracements or bullish breakouts, which are all momentum bullish patterns. Right now, you're seeing a little bit of momentum to the downside, and you're seeing bears take a little bit more control on the intraday analysis. So I do think there's a little bit of, hey, let's see this support level right there at 155, right where the upward moving 50-day moving average is. Let's see that hold. And if that does hold, then I have a lot more confidence in the Microsoft or the semiconductors or other instruments that we're looking at in the tech space. But yeah, because of that, I do think you're looking at a little bit of a downgrade.
Yeah.
Very good. Anything else in those
The
areas?
last one would be discretionary quickly here. And discretionary, it's tried, it hasn't broken out yet, but this is a sector I actually really like right now. From an overall sector perspective, you're talking about taking a punch. There's just something, I must have watched a documentary or something. Mike Tyson's famous saying, everybody's got a plan until they take a punch. Well, the market gave a punch this week, right? What discretionary do besides kiss the all-time high?
Is just holding up here. Is looking good.
Yeah,
right?
It's held up really nice.
And Frankie, I'm certain you're going to have some Frank's charts here, buddy. But let me just kind of take a quick peek at a couple of them. Tesla, which has not been a darling on breakouts. How many times have I said that before?
You said that for
breakout
about
time.
6 months. Yeah,
Have I said that before?
All over it. Yeah.
I kind of like the breakout potential of Tesla right now. Just throwing it out there. But I do. And there is something happening for me anyways on Tesla. And it's the multiple time frame analysis lining up. Tesla has not been a great breakout king, and Tesla was a breakout king. Tesla's been a breakout king for many years, guys.
Yeah.
Many years. Tesla had that AMD type breakout status, right? It's just been the last year where it hasn't been a great breakout trade. And so when I'm looking at Tesla here, breakout, consolidate, breakout, consolidate, breakout, consolidate, breakout, consolidate. Well, it's because when I'm looking at the left of the chart, it's just so much nasty chop.
There's always something, right?
There's just so much nasty chop. But now we're starting just a little by little, slowly by slowly, creep ourselves up to hitting into some major resistance areas over here. And so when I look at this on a weekly chart, I'm looking at Tesla now. Nice little grind here. But guess what's happening? You're starting to see a little bit of momentum shift here in Tesla against this grind. Look at the grind against my nice, yes, that is my nice trend line there. Look at that grind. look at the momentum shift above the grind. You got to like that a little bit. When you look at the daily chart, where Tesla could have got ugly, right? Where it could have got ugly, breakout, got ugly, breakout, got ugly. Where it could have got ugly, right here. Hammer time. Just hammered candle. Held that rising 9. And so I do see a shifting characteristic here on Tesla. And you're coming into some major resistance levels over here. So I still maintain technically my Tesla has not been a great breakout trade because it has not been a great breakout trade. But it's got one of those opportunities that I feel that is coming into some major resistance. The sector is taking the punch really well this week. Tesla, the growth stock out there in an environment where the market's like, I don't know what we want to do, is holding up perfectly fine. And then you take a look at some of the other components out there, like some of your Home Depots of the world.
Oh yeah,
right?
Home Depots and
Home
Lowe's
Depot
looking
looks
good.
good above 340. When you look at Lowe's is already, testing that 210 breakout there, Frankie. When you look at, even Royal Caribbean here.
Yeah.
Okay. I don't know when the last time I brought up Royal Caribbean. It's usually just to throw cold water on it when Mark's geeking out about his latest naked put. But what you're looking up here now, pretty clean above 85, guys. Pretty clean above 85 there on Royal. So, in a world where we're seeing tech volatility in the S&P, the entire market up and down, up and down, up and down, up and down, up and down. Here's discretionary.
Yeah.
Starting to set up a little bit.
Yeah.
And just in time for Santa to start coming next month and for retail sales this week to kick off. So
I like it. Well, while we're talking discretionary, just because don't want to forget this one, what do you think? Target's even starting to shape back up. We got a little double bottom. It's at the 20 weekly. Still has some work to do, obviously. But even some of the things that are, not flying high, like Target or like, Home Depot and Lowe's that are doing great, are lining up. We talked a little bit about GM last week, coming off of that bottom. Ford is moving and shaking. So this is an area that's definitely intriguing coming into this upcoming week for sure.
On the daily chart, I'm in swing trade mode because I'm in scatter report mode. And so I was like, right, I'm just lasered on that daily chart. I'm like, Frankie, you know better.
What are you talking about?
What are we doing here?
What are we doing here? Yep.
Come on, we got that. What are we doing? And then I'm like, all right, just shut up, Matt. Just go out to that weekly. Oh yeah, I see what you're saying. Okay.
Opportunity on the
Let's
weekly.
go.
That's a pretty weekly chart.
Look at that. Look at that nice 3-day pullback. 3-day, call it 3-bar. I'm sorry. 3-bar pullback. Look at the shifting bottom right on that rising 20. Look at confirmation above the 9. Yeah, I see what you're saying there, bro.
Yeah. And so there's a lot of interesting things, right? And I guess that was really my point, whether we're talking about things, breaking into highs like Home Depot, nice clean breakouts on Tesla, pullbacks, bottom fishing on things like GM and Ford that have really started kicking up. It's, and you're seeing it in restaurants. I mean, you're seeing a lot of things starting to fight the good fight that haven't really been participating all that much in the space lately too, which is definitely intriguing.
Yeah.
Interesting. So discretionary, we're still anticipating a lot of good setups in there.
Last week technically we did front run the breakout opportunity in discretionary last week with the ranking. We liked that price action consolidation coming into the market, obviously downward movement, but like the healthy nature of this market over time. Because we upgraded the ranking last week in front of the breakout, a little front running by us at Tackle Trading there. I'm going to say no to the upgrade.
I would
this
say
week,
so too.
because I think this week is more maintenance versus last week. I just like it a little bit more this week than I did last week.
That's fair. All right, gotcha.
Okay. What do you think? Just talking communications, the one thing that jumped out at me the most on the communication side of things as we wrap up the discretionary side of things is just the consistency of that actual ETF's chart. I mean, that thing has been so consistent within its channel over the last year-ish. I think that's a really intriguing way. Obviously, we haven't triggered yet, right? And we may not, but I think that's at least an interesting way to maybe get some exposure to the Netflix pullback, to the Facebook that's kind of got an uglier chart looking right now.
Yeah.
Google's been kind of weird to trade lately. There's definitely been some increased volatility in communications. Were you seeing that as well, Matt?
Yeah, in fact, you know,
Like Charter just
the patterns are changing a little bit more than the sector itself is. And I
yeah,
think it's giving a little bit of a misread on the sector. Because when you look at the sector in comms, you do see you see a very consistent pullback to the 50. But one thing I don't like about this reversal here is you had multiple opportunities to reverse over the last 2 days. Look at the consistency downward movement in price. It tried, it failed.
it
Mhm.
tried
That
and
that
well,
concerns me.
see
That
on
concerns me just a little bit. But let me finish
yeah,
my
yeah,
thought very quickly. The one stock that I did write down that I wanted to discuss with the team was the first stock that you pulled up, Netflix. And more than anything, it's just a conversation on what is the best way to play this pullback, right?
Mhm.
Is it on the credit side? Is it on the risk adverse delta side? What strategies are the coaches looking at to play this? Maybe it's just long call and let's giddy up and go, right?
yeah.
So there's a lot of different, because you got to love the momentum and you got to love the zone you're in on Netflix right now. By the way, I thought the trade confirmed yesterday with the hammer candle yesterday.
I do too. And to your question, I kind of like a slightly out of the money bull call personally.
And that's where I'm kind of at as well, Frankie. I like an out of the money bull call spread here as well. But again, and I do like on the delta side because I think volatility is going to help you, not hurt you on the
Mhm.
delta side right now,
Mhm.
because
Mhm.
you're right in that nice little zone between the two earnings seasons as well with
Yep.
Netflix. But outside of Netflix, when you're looking at the top of the market, I don't think you're looking at buying the dip on Facebook until it gives us some degree of better pattern than it's given us right now,
I agree. It's a nasty
right?
It's
pullback.
it's
Mhm.
almost impossible for me to think about trading Facebook. But on the other side of it, I would have said probably similar things off the
Yeah.
last two tests of the 50-day moving average, right? I'm not a Facebook trader. It's
I,
just
I
not
was going to
something
say, you and me, like,
we just
when
tend
when
to
you said it's kind of impossible for me to see trade, yeah, let's just end on that. Like, we don't trade
yeah,
Facebook.
it's
Okay,
tough. But
we'll
if they
take the
do
Google side of that equation.
exactly. What I
Yeah,
like though, and what I like specifically about XLC as a potential instrument is that while it's almost impossible that I could catch the Facebook bounce just with the way I trade, I mean, you never know, right? You never say never, but almost never.
Mhm.
It would, of course, XLC would benefit tremendously from that. And same with Google lately. I mean,
hmm
Google's been a little weirdo, right? It's just kind of sideways at the side. So I don't know. For me, I looked at the XLC, and one thing that I do agree with what you were saying about the sector ETF as a whole. But one thing that I truly do appreciate is, at least in my opinion, it never did enough to give you reason to think it was ready to go. And so
yeah.
it didn't do any triggering. It didn't trick me or anything along those lines. I still think we have to take out that very clean downward trend line before we can start having any discussions within that as a whole. But
I
definitely an
think in
interesting
general,
sector.
Gotcha.
you're looking at the communication sector and you like the 50-day moving average. I think in general, you like the 50-day moving
Sure.
average. You look at it, bounce over here, bounce over there, actual violation, but a pretty clean bounce over here, bounce over there, slight violation, but you got to call that a bounce. And then that's just a choppy mess of nothingness last October that we all know about.
Yep.
Here, I do think you got to respect the volatility over the last couple weeks here. Obviously, you're looking to downgrade from a sector perspective,
Agreed.
but it's one of those, you downgrade because you respect the short-term volatility and the short-term concern, absolutely. But in the back of your head, you're also saying 50-day moving average, 50-day moving average. I think it needs some time to solidify that 50 though. Right
Mhm.
now, it's a test, and I think you got to pass the test.
Oh, I absolutely would agree with that 100%.
Yeah.
If we pass the test, I find it an interesting candidate personally. But yeah, we haven't passed the test yet,
Well,
right?
and
We might
again,
not. We might not.
if you want to see the visual, what passing the test is, it starts with that support level currently where it is at
Mhm.
literally right now by holding.
Testing it
I
right
mean,
now.
that's step one.
First
You got to
step.
hold. Come on, comms. You got to
Yeah.
hold. Unless you're looking at those bearish trades out there,
Might
obviously,
be a
and then you're
couple,
like,
so.
"Shut up, Matt. Let's go, Twitter."
So yeah. I was just gonna say Twitter. Let's do it,
Like,
Twitter.
yeah, stop talking. Let's confirm underneath that 200-day moving average. Let's go.
Interesting little flag
And
on
the two
Twitter.
sides of every trader, like two-faced, right?
Yep.
Nature
Yep.
of it, short-term trading. That's
It
the way it
is.
is. What
It
about the
is.
defensive areas, Matty?
Defensive areas, and let's go rapid fire here on the defensive side of the equation. Healthcare here, long-term chart. You see the quality of the long-term chart. Let's look at the daily chart, though, to look at the analysis for this week. Obviously, you're looking at the pain really happened last week in healthcare, where you saw this downward movement in price after the double top, double bottom, violate your support level right at 134, quick journey down to 132. But outside of just Monday's downward movement in price, I do think you got to respect what happened at 132 in the healthcare space. It's an old support level over here, right in the bull zone. It really kind of got stuck right there at 132, fighting for that 50-day moving average. The problem, bears still have control of the sector in the short term, in my opinion, given that 9 EMA is now just crossing downward. And you look at the last 3 days, fought to get up, got beat back down by the 9, fought to get up, got beat back down by the 9. So we're in an interesting test where you have a little bit of a pressure being applied on the sector. It's fighting for that 132. 130, if 132 does give, you're not talking, you really don't have anything until you get into the 130 level. So quick journey would most likely happen there. I think you got to respect that. I know we downgraded healthcare last week as well, but healthcare for me, it looks like a 10-point downgrade for me, and put it into the 40 and let it work and cook until we see some degree of trend start to develop again.
Yeah, you definitely need the trend. I'd probably be more inclined to be a 5 downgrade myself. I do like the stabilization that we've seen within it. When you're looking at this chart, I mean, you're basically like the market, right? It's basically, not necessarily K trade, but K signal. Break that support level. That'll show me, signal to the downside. Take out that 9 EMA, that high from this week. That would give me some confidence to the upside. The stabilization is good, but we can't just hang our hat on. You don't get rewarded for just doing nothing unless it's pure cash flow. Then you're all right with that, right?
Yeah, see, that's the beauty of the cash flow traders. They don't have to concern themselves with the directional nature the way us Delta dogs do there, Frankie.
Yep.
But the 132 break, I think you got to respect the stabilization of 132 this week. It could have got ugly this week. It didn't. I think you got to respect that. But I still see that 9 coming down, and I know what this sector looks like underneath the sector itself.
Yeah,
it's a lot of garbage, right? It's a lot of garbage. Not a lot of great trades out there. Need some time to cook. Honestly, it needs a moment in the corner. Put the nose in the corner. Take a time out and take a chill pill a little bit. Calm down. Let's see it calm down a little bit in this sector. I like the 40. Certainly can be talked into a 35 though.
That'll be an interesting conversation because I'm kind of on the other side. I like to find a 5-point downgrade, but I could certainly be talked into the 40.
Yeah, it's one of those.
So it's one of those that will be a fun discussion with the other coaches.
It's the eye of the beholder, right? Do you like the stabilization at 132, or do you hate that 9 EMA coming down a little bit more? It's just one of those scenarios. But you are looking at a little bit of downgrade. Yeah, go ahead, Tim.
One healthcare stock I did want you guys to highlight real quick, though, is TMO. I agree with the neutrality conversation.
Thermo Fisher firing today.
I was going to bring them up in stock talk. I only got like 1 or 2 stories today, but they raised their full guidance. They fired off, and they got a beautiful breakout with momentum.
Okay, Thermo. What? Okay, then why can't United States still do the same thing here? United States still raised full year guidance. We're seeing the opposite impact there. I see how it is.
TMO's getting the positive reaction.
And it's bad day still.
Bad day for that news. Yeah, they did also announce a $3 billion plan to build a new mini plant.
I really like the news out of U.S. still, but it's just that area of the market is a stay away until we see a little stabilization. But you saw, you take U.S. Steel again. Thermo Fisher, U.S. Steel both raised full year guidance, correct? Thermo Fisher firing off, U.S. Steel getting smacked. What's the difference?
Sector.
Nobody likes the material sector, right? Healthcare has been stabilizing all week long. When you see stabilization, news stories that come out, you will get a more positive response because the market participants are simply more confident in that area. Right now, there's not a lot of confidence in the material space.
That's fair. That's fair.
And that was just a continuation of that nice long breakout, right? Remember we had that big sideways breakout after that, well, right before the earnings, but the earnings didn't do anything with us. So nice movement on thermal. They've been very well behaved. So I mean, today's obviously it takes a gift, right? But it's been really well behaved going into that, holding up relative to some of the weakness in healthcare as a whole.
Strong performer. All right.
All right.
Any last ones there, Matty, on sectors? I know staples.
Not on
real
healthcare.
estate.
Let's quickly go through staples. Technically, I think you're looking at a little bit of an M formation. Look at, I'm not sure there will be a downgrade or not here. We did have it at a 35. I think you got to respect the M formation. A 5-point downgrade does make some sense to me in the staples area of the market. From a utility perspective, have fun with this sector. Anybody, we started downgrading aggressively on the actual double top here. And I even said this in the halftime report. Hate that volatility shift. Just absolutely hate that volatility shift. It's been nothing besides sell, 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 sell since then. Looking for another downgrade out of the utility space. And then when you're looking at real estate, this is an area of the market that is fascinating to me this week. Whereas you see utilities just get absolutely blasted, you're seeing real estate do its best stabilization, healthcare moment, financial moment type thing, where you see just short range dojis in between rising 50 and the 20 here. Obviously, the 9's catching up, but now you're looking at a little bit of just K trade scenario. I like that. I like the fact that real estate held up this week. I like the fact that real estate held up against staples, healthcare, and utilities this week. It was the one sector in the defensive areas that really stabilized in from a charting perspective. And I like the tight trigger with confirmation that's really simple above the 20-day moving average here. So yeah, I'm not looking to downgrade here in real estate. Real estate has a 25 ranking. It's the highest rated sector at tackle trading for the defensive side of the equation. I don't see any reason to downgrade here.
I would be a maintenance as well. Frankie, you agree?
Yep.
All right, very good. Guys, we're going to have a fun meeting here in a little bit. Obviously, there's some conversations the coaches have to have. We're going to be dialing all of these rankings in as we do each and every week. Matt, appreciate that thorough breakdown and all the analysis there, Frank, as well. Guys, from a stock talk perspective, there's not much more in the news I wanted to cover there. You hit the U.S. Steel news, hit the Thermo Fisher news. Ford did announce that they're going to put $250 million more for more EV plant development, that kind of stuff. But let's get a couple of Frank's charts, and then let's start wrapping up the entire thing here. But Matty, we do need to look at a few of the commodities.
Before you go, no, we don't. Before you go into that, obviously, guys, keep an eye on these technical situations in the broad market. You're looking at a little bit of sell here over the last hour, coming into some fairly decent intraday support, very important intraday support. Once again, a little bit different here. You see the drop, pretty quick drive.
Yeah, for sure.
It's one of those situations. Got to hold here. Could see a sell.
Yeah, the next little bit intraday is going to be important to watch. All right, very good. Do you want to flash quick through the commodities? Just a little rapid fire style,
Well,
crude light.
Just to make sure that you're okay, because I know it's written on your notes. Yes,
I know my process.
I know it's on your notes. So let me make sure that I cover crude. It's doing nothing. We talked about energy, and when we're talking about gold, you're seeing the pain in the material space. That was yesterday. Gold's a little bit of carry through, but again today you're looking at 1750. There's no trade here though. There has not been any trade here on gold for quite some time. This is more about locking down risk graphs in the gold miner space, in my opinion, right now, and on any gold instrument like an ETF from a long-term perspective. Silver showing some real weakness, coming into some major support. Copper showing some weakness, coming into support, but not nearly as much. Bitcoin last. In a world like this, world's just upside down. Everything's kind of crazy, and yet Bitcoin's like, let's just go.
Let's just party. Let's just hang. Yeah.
Well, no, the market's breaking support literally right now, and Bitcoin's like, we're gonna doji.
Yeah, whatever. It's Friday.
Like, let's just go. We're gonna take the weekend off early. Have a great day.
Yeah.
Type analysis there. So, but let's get into a couple of Frank's charts here at the end here, Frankie.
Let's do it.
Right. And we've already talked a lot of Frank's charts.
We've definitely hit several of them. Why don't we just quickly start with just really quick with the Twitter? I think that's really interesting bear chart, and you very briefly, we don't have to go too crazy on it, but after breaking down, working back into that old support as new resistance, dojing above the 200, which you got to give that a little bit of credit. I do think at this point in time, you have to take out both today's low and that 200. You would get you that in the process, but just a very, very textbooky bearish retracement, right? I know you had it as well, Maddie. Anything you'd
I
add to
do.
that technically?
No, I think obviously you're seeing a little bit of sell in the market here right now. You haven't really seen any follow through on Twitter. That kind of just in the back of my mind is like, come on, what? Let's go.
Yeah.
Right.
Yeah.
But the let's go start points with confirmation for me. And so when you're talking about confirmation, you always got to pick your line in the sand. And my line in the sand kind of just goes right at the low of today, and you couple that with the 200-day moving average. And so I think if you get right back underneath that 200-day moving average, I think it's a quick journey to 60, but obviously you're probably targeting lower than that.
Yeah, probably. But yeah, you're kind of testing that first level, right? And then
Yeah.
the real payday is if that level gives out, because there is room to the downside. All right, this is one that we talked about last week as a breakout, at least in the reports, and that is OSCR, Oscar Health. I love what I'm seeing these last few days here in Oscar. We had the double bottom happen back in August, right? Captured the 9, got back on the right track, went basically sideways the last couple of weeks. We were looking at it, and I was definitely looking at it as a breakout coming into this week. Wasn't meant to be, but we maintained pattern. Heck, I even like it more because we pulled back and tested that rising 9 and bounced off of that into that resistance. I see a really clear path on these guys into that old IPO, old low, old pivot that we have there at around 2070, give or take. Definitely a really clean chart, I thought.
I think, I do too. And your targeting is going to be a little subjective.
Sure.
Swing trading, and I'm doing a swing trading webinar on Monday. Swing trading is all about, basically zones and targets, right? Do you like the zone? And if the zone holds, where do you like the target type thing? Well, I like the breakout here. I think the breakout's really clean. I like that technical pattern. I like the time over the last week, the consolidation, holding that 9, really kissing up against that breakout channel. I think you drive it into 20. Old resistance, old support coincides with some resistance over here as well. I think 20 is kind of a target. Above 20, I think you're looking at 2180.
Yeah, I think that's fair. And what I always tell people, and myself included, with targets is ask yourself 2 questions. Number 1, does it make sense? That window, we could squabble over pennies on the window, right? But that's the window that makes sense.
Well, they're all zones, right?
Yeah, everybody's so the window is, it might be a little different from trader to trader, but the zone is going to be the same. And then does it make sense to you? If you're trailing your stop loss up off the hourly 9, trying to get up to 2180 probably doesn't make sense for that style of management, right? So line up your management style with your targeting style, but really liked that on the breakout side of things.
I like it too.
One of the very clean charts I felt was First Solar, FSLR.
I wrote down First Solar as well. And then I crossed it off, and then I wrote it down again, and that's where I'm at right now. Like, I don't know what I was trying to convince myself out of, because every time I look at this, I just see a nice flag that kissed off the 9.
Yeah, I mean, nothing fancy, right? Flag off of the 9.
I think what happened, Frank, is I wrote down First Solar that when I scanned, and then I got into the power morning meeting with Mark and Tim, and they're like, "Hey, are you concerned about this, Mark?" And I'm like, "Let me cross off First Solar." Right? And then I wrote it. Yeah, I think that's what happened.
Bull's not named Microsoft or something along those lines. Yeah,
I like it though. I like it.
A very easy trade on the entry side of things. This is an interesting one because I think, the way I was thinking about this one, it's almost like, and I bet you'll talk about this in your swing trading webinar, a little bit of the front running of those old highs, right? So, we do have to navigate those old highs, and, while it's a little wicky, I'm going to call it, 110, it's, up in that range. That's an area that we obviously have to respect. A breakout of that area would be really obviously a good signal. We've had a great movement as of late. So I was kind of thinking about this as a scaling into the potential break and add on the breakout type of a trade. It's kind of where my head was with these guys.
When you're looking at flag-based patterns, and I love the debate on scaling. I absolutely geek out on the debate on front running and scaling, because when is it appropriate versus when is it not, right?
Yeah.
And for me, it's all about the quality, because you're never going to get a great R to R when you're trading a a bull flag and you're front running into resistance. You're just not, right. You're trying to maximize your potential. There is what you're trying to do. You're trying to get in front of, like, let's say this is the wave, right? And you're trying to get in front of those algorithms that drive it upward on the breakout. And so you're trying not to miss that hypothetical that the breakout might represent. And so I love the debate on the front running and when is it appropriate. Flags to me are one of my favorite patterns to front run because they have momentum behind the trend. You have nice momentum behind the trend. You see a very consistent flag that comes into the 9. I like that from a momentum. That's just traders locking in profit. That's all that is. You see that big time increases in volume, short decreases in volume there. Pullback looks good. Stabilization coming in on the 9. You like that. Yeah, I like a scaled in approach on a front run here on First Solar. And yeah, I went from loving First Solar to not liking it to now loving it again. That's what today has represented.
You've gone through the full gauntlet, huh? I like it.
I respect it.
I just needed Frank's wise words. That's all I needed.
I like it.
All right, Tim, I got 2 more rapid fire. 1 bull, 1 bear. On the bearish side, LYB.
LYB, specialty chemical.
Specialty chemicals.
Yep.
Support, reverse cup and handle, room to go. Not a lot of support for quite some time. So nothing too crazy on that one. On the other end of it, SHLS. And I have these guys
34?
as a little bit of a 34 break. Yep, 34 breakout.
Drive to 36?
Into that, 36 by just 37.50. I'll call it just shy of 38.
Walk up the stairs.
And they've been really nice in that regard and been pretty clean. So just another little breakout candidate. And I would be remiss to not bring up Applied Materials, one of our favorite to tackle trading. They're pushing to the top of their trading range they've been in for quite some time. So maybe not necessarily for a trade next week, but anytime one of your favorite stocks is, in a long-term range.
Did you say, hey, Matt?
I said, hey, Matt. Yeah.
That's what you said.
I said, hey, Matt, we still have some, we haven't broken out yet, but anytime one of your favorite stocks is at a resistance level, a key level, or in that ballpark, at least it's time to start thinking about what, if anything, I'd be interested in doing, right? Uncovering, I know Izakar said earlier on PLTR, he had to uncover yesterday, right? He was ready to do so because it was that important price range, right? Yeah. And same with the AMAT here. So definitely a chart worth monitoring going forward, I think.
100%. Great company, fundamental darling, tackle 25 darling for many, many, many years. Applied Materials, this is what it can do on a breakout. Look at the breakout. Look at the run. Consolidation, long-term consolidation now. Look at the breakout potential. Keep an eye on it. Get it on the radar. I agree with that one, Frankie.
Keep it on your
radar. See how I snuck in a third, Tim, when I buttered you up and said 2 were coming? And you didn't even mind.
And by the way, the one you flashed through real quickly, that LYB is definitely an interesting chart and pattern for the bear side. I'm glad that you grabbed that. Fits something with the basic materials theme with the weakness there as well. So love the charts, Frank. Love the segment each and every week. Thank you.
Yeah, me as well.
Team out there appreciates it. Let's start moving into the back of the market. Let's look at this S&P 500. I know we're still testing around the support zones and whatnot there, Matt.
Hanging around.
The close is going to be important here today. Final thoughts for the team out there, Matty?
Final thoughts are we have a interesting, nice little technical pattern as we come into the market, close this week, and it's been a fantastic week to hang out with you guys at Team Tackle. But you got to be a little bit concerned about just the short term. Remember the backdrop on the long term. All those, everything we hear, everything we see when the markets are coming down screams down, 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 down. Remember the backdrop. That is the backdrop. That is the long term. The concern is in the short term, not the long term at this point. So again, on those long term things, I think you're locking down some risk graphs right now, writing some covered calls, right? Bringing in some of that nice little cash flow. Line it up for a nice little Christmas rally in about a month from now. We'll see if it works.
Yeah, that sounds like a good plan to me. Yeah, I mean, keep an eye on this going into the close, right? The close is going to be really important. And I would argue that the follow follow through we see on the open and the futures is going to be equally as important. So I think we definitely want to make sure we're touching base with the market at the end of the day, and definitely make some time between your football games to check the futures going into Sunday.
Absolutely. Yep. All right. Now, a couple of quick programming notes and events that I do want to make sure that we talk about. Matt, you mentioned your Monday event that we're going to be holding Monday night, 8:30 p.m. Eastern. I'm going to drop a link in the chat on that. Coach Matt here is going to be doing a webinar on swing trading 101. He's the architect of the step system. Matt, you're a wonderful technician. Anybody who's been in the halftime report knows that. And I'm excited to see what you bring to the team in terms of education on Monday and what you're going to be covering. A lot to unpack there. When you get to the page on the video, by the way, guys, you can click the reminder to make sure you have a reminder on. You know, that will alert you to come. And when we go live there at that time on the event, click that bell on, make sure that you come and join us. Matt, anything you want to talk about with this event on Monday?
Yeah, 3 likes. You know I'm going to bring more fire than that, Team Tackle.
That's right. Let's get over there and click that thumbs up. Yeah,
you got to see the last one. Look at the last one I did, guys. I just wanted to show Mark, not that dude. Co-opting our.
I'll get right to
here,
it.
buddy.
My name's Nick. I'm just some.
All right. That's not Mark.
This is Mark. What's it place? There he is. 2.4K likes on that one. Let's front run this one again, guys. Let's go. I'm excited. I love teaching technical analysis. I love technical analysis in general. And the art of swing trading is it is technical analysis, but it also understanding what creates the analysis behind the technicals. And so I'm excited. We're going to have a lot of fun just going through an hour webinar on the art of swing trading. I'm going to talk a lot about, basic technical analysis, a little bit about candles, a little bit about support and resistance. And for those of you that are, long-term team tackle, I'm sure you've heard me talk about those things a time or two. But I would more than love everybody coming out and hanging out with us on Monday night. Pro members, non-pro members, rookies, veterans, everybody. The more the merrier for me. Let's have some fun. But definitely get ready and come hang out with me on Monday night.
Let's definitely do it. 8:30 p.m. Eastern on Monday is when we'll go live. We'll be hanging out before then. We'll also remind everybody, obviously, on Monday when we're in the halftime report. One other programming note tonight, ladies, the Women in Trading Mastermind Group is 8:30 p.m. Eastern as well. The events calendar at Tackle Trading, I'll drop that link on there so that you can make sure you come and join Coach Emily for that monthly mastermind group, one of the more popular ones we have at Tackle Trading as well. And we are breaking down. We'll see how this thing closes, guys. Yeah, it's a violation of support on the intraday here as we're heading into the last.
Keep an eye on that close, guys. These levels are important to hold.
Couple hours left. Going to be important to watch it. All right, guys. Appreciate all the thoughts, the analysis, guys. We are done for the week here on the